Picture this. Your manufactured home just doubled in value, your property taxes plummeted, and banks are fighting to give you the best refinancing rates. Sounds too good to be true? Well, stick around because I'm about to reveal how turning your manufactured home into real property could be the smartest financial move you'll make this decade. Hey there, fellow manufactured homeowners and curious minds. If you're fascinated by clever ways to boost your property value and secure your financial future, smash that like button and subscribe. Drop a comment below sharing your experience with manufactured homes. We love hearing your stories and building this amazing community together. Did you know that 22 million Americans live in manufactured homes? Yet most don't realize they're missing out on massive financial benefits because their homes are still classified as personal property, just like your car or furniture. Today, we're diving deep into the world of real property conversion, and trust me, this information could save you thousands. Let me introduce you to Mike from Arizona. He was paying a whopping 12% interest rate on his manufactured home loan until he discovered the magic of real property conversion. Now he's got a conventional mortgage at 4.5%, saving him $375 every single month. That's enough for a fancy dinner date every weekend or an extra vacation each year. The beauty of converting your manufactured home to real property lies in the domino effect it creates. First, your home becomes permanently affixed to the land, which means banks view it as more stable collateral. This opens doors to better financing options, lower interest rates, and longer loan terms that can significantly reduce your monthly payments. But here's where it gets even more interesting. When you convert to real property, you're essentially changing how the legal system views your home. It's no longer a vehicle that happens to be your residence, it's now a legitimate piece of real estate. This transformation can lead to better insurance rates, improved resale value, and in many cases, more favorable tax treatment. Let's talk about the perfect timing for conversion. The ideal scenario is right when you're purchasing the home and land together. However, if you already own your manufactured home, don't worry. You can still convert it as long as you own the land it sits on or have a long-term lease agreement. The key is ensuring your home meets local building codes and zoning requirements. Now, I know what you're thinking. This sounds complicated and expensive. But here's the truth. While there are some upfront costs, they're typically minimal compared to the long-term savings. We're talking about potential expenses like hiring a professional to inspect the foundation, paying filing fees, and possibly upgrading tie-downs or utilities to meet local codes. The actual conversion process varies by state, but generally involves 4 main steps: obtaining a foundation certification, surrendering your title, filing the necessary paperwork with your county recorder's office, and getting an affidavit of a fixture. It might sound like a bureaucratic nightmare, but most people complete the process within 30 to 60 days. Here's something that might surprise you. Many mortgage lenders actually prefer lending on converted manufactured homes because they hold their value better over time. Think about it, when your home is permanently attached to the land and classified as real property, it appreciates similarly to traditional stick-built homes. This means better equity building potential for you. Let's address some common concerns. Many people worry that converting their home will increase their property taxes. While this can happen in some cases, the benefits often outweigh the costs. Plus, in many jurisdictions, you might actually qualify for homestead exemptions and other tax benefits that weren't available when your home was considered personal property. The environmental impact is worth considering too. When you convert your manufactured home to real property, you're making a long-term commitment to the land. This often leads to better maintenance, more energy-efficient upgrades, and a reduced carbon footprint. It's a win-win for both your wallet and the planet, especially in today's environmentally conscious market. Here's a lesser-known advantage. Converted manufactured homes often qualify for government-backed renovation loans and energy efficiency programs. This means you could potentially access funds for solar panels, new windows, or other improvements that would normally be off-limits for personal property manufactured homes, giving you even more opportunities to increase your home's value. Security is another major benefit. When your home is classified as real property, it becomes part of your local property records. This provides an extra layer of protection against title fraud and makes it easier to prove ownership in case of disputes. It's like having an additional insurance policy on your investment, protecting your family's future and peace of mind. But wait, there's more. Converting to real property can also make your home more attractive to future buyers. Many people who might be interested in your home but hesitant about manufactured housing will feel more confident knowing it's been converted to real property. This expanded buyer pool could mean a faster sale at a better price when you're ready to move. The insurance benefits deserve special attention. Many insurance companies offer better coverage options and lower premiums for real property manufactured homes. They view them as more stable and less risky than their personal property counterparts. Some owners report savings of up to 30% on their annual premiums after conversion, putting more money back in their pockets. Let's talk about estate planning. When your manufactured home is real property, it's typically easier to include in your will or trust. There's no separate title transfer process for the home and land, which can save your heirs time, money, and headaches during an already difficult time. This simplification alone can be worth its weight in gold for many families. Here's an interesting twist. Some states offer special financing programs specifically for converted manufactured homes. These programs might include down payment assistance, reduced interest rates, or help with conversion costs. It's worth checking with your state housing authority to see what's available in your area and how you can maximize these opportunities. Remember Mike from earlier? 6 months after his conversion, his home appraised for 40% more than its pre-conversion value. The permanent foundation and real property status made it comparable to traditional homes in his neighborhood, effectively erasing the manufactured home stigma that sometimes affects resale values. His success story isn't unique, many homeowners experience similar benefits. The best part about conversion is its flexibility. You can usually do it at any time, though sooner is generally better than later. If you're planning any major renovations or refinancing, that's an ideal time to tackle the conversion process. You'll maximize your return on investment and potentially qualify for better renovation financing options that can transform your home. Another crucial aspect to consider is the impact on your credit score. When your manufactured home becomes real property, your mortgage payments are more likely to be reported to credit bureaus, helping you build a stronger credit history. This can lead to better lending terms for future purchases and improved overall financial health. Let's discuss the technical requirements for conversion. Your home needs to be properly installed on a permanent foundation that meets local building codes. This usually involves a concrete or reinforced block foundation with proper anchoring systems. The utilities must be permanently connected, and the wheels, axles, and hitches typically need to be removed. One often overlooked benefit is the potential for home office tax deductions. When your manufactured home is classified as real property, it's easier to claim legitimate home office deductions if you work from home. This can result in significant tax savings, especially with the rise of remote work in today's economy. Local zoning laws play a crucial role in the conversion process. Some areas have specific requirements or restrictions for manufactured homes. However, once converted to real property, your home may be treated more favorably under local zoning ordinances. This can affect everything from property use restrictions to future improvement possibilities. The impact on utility costs is another consideration. Many converted homes qualify for energy efficiency programs that can help reduce monthly utility bills. Additionally, permanent utility connections often result in more stable service and potentially lower rates compared to temporary or mobile home connections. Here's a fascinating statistic. Converted manufactured homes in some markets have appreciated at rates comparable to traditional site-built homes. This challenges the common misconception that manufactured homes always depreciate. When properly converted and maintained, these homes can be excellent long-term investments. Community impact is worth mentioning too. Converted manufactured homes often contribute to neighborhood stability and property values. They demonstrate a long-term commitment to the area, which can encourage other property improvements and community investment. This ripple effect can benefit entire neighborhoods. The financing landscape for converted manufactured homes has evolved significantly. More lenders are recognizing their value and offering competitive loan products. This increased competition in the lending market can lead to better terms and more options for homeowners, making it easier to refinance or access equity. Speaking of equity, let's talk about home equity lines of credit, known as HELOCs. Converted manufactured homes typically have better access to these financial tools, which can be invaluable for home improvements, education expenses, or emergency funds. This financial flexibility is a significant advantage over personal property manufactured homes. Understanding the role of appraisers is crucial. Professional appraisers often value converted manufactured homes more favorably because they can use traditional site-built homes as comparables. This can make a substantial difference when refinancing or selling, as your home is evaluated based on its true market value rather than being limited to manufactured home comparisons. Time to address resale strategy. When marketing a converted manufactured home, emphasize its real property status and permanent foundation. These features attract a broader range of buyers and can command better prices. Many real estate agents report faster sales and higher offers for converted homes compared to their personal property counterparts. The relationship with local authorities changes after conversion. Your home becomes subject to standard real estate laws and protections, often resulting in better service and response from local government agencies. This can be particularly important when dealing with property disputes or seeking permits for improvements.